Hello everyone, this is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending November 14, 2025. So the name of the review this week is Back Online. Of course, it refers to the ending of the government shutdown in the US. Now we will be getting the new, the postponed official data. At what pace, that is the question, and of course how will the data availability impact the decision from the Fed on December 10th. So that's the big thing, and this is the thing that is creating some volatility in the markets this week. Volatility started mostly on Thursday, but as I'm recording this, Friday morning markets are not open yet, but futures are pointing towards a tough day again. Of course, there's still some worries about AI. You know, that's kind of a thing that comes and goes. Oracle, for example, had very strong performance when they announced all of those deals about data centers, but now markets are, let's say, selling on the news and wondering if Oracle will be able, how will Oracle be able to pay for all of this debt, and how viable is the team anyway. Of course, this comes and goes. We'll see, but markets now are starting maybe to reprice what was one certainty. It felt like in the markets that the Fed was going to be cutting 3 times September, October, December, and then cut again multiple times in 2026. Now it's getting a little bit more, let's say, blurry. So we'll talk about that in a few minutes. But if you look at the markets at the close on Thursday here, so picture still looks pretty good on the week. Let's see how it ends, because today is shaping up to be a negative day. But Canada was up after 4 days by 1%. The US stock market was flat to negative. EFI and emerging markets were positive by 2 to 3% in Canadian dollars on the week. Gold is now back close to their to its peak. The recent peak was at between 43.50 and 4,400. Now we're at 41.71. So we still feel that gold is in a consolidation phase. We're still observers. We're not participants in this trade in our discretionary books. Nothing's changed here, and we'll keep you posted when and if we change our mind. Now, the topics of the week. So the U.S. government shutdown is over. Trump has signed the bill ending the longest U.S. government shutdown in history. It was about 40 days. And now the crux here is about U.S. healthcare. So the bill does not extend healthcare subsidies, and absent other legislation, they will be expiring at the end of this year, raising the cost of benchmark insurance for the roughly 22 million Americans who rely on coverage from the Affordable Care Act. So, and of course, if households, that are made of that consist of older Americans, it could be a very sizable hit to their wallets. So we'll see what happens. But Senate Republican Majority Leader John Thune promised only to allow a vote on extending these subsidies. And this is the important part here, because the shutdown ended because the Democrats shifted the game and they said, all right, we'll sign off on everything except healthcare, as long as you promise, as the Republicans promise, that they will be allowing for a vote on specifically this healthcare by the end of the year. And this is, of course, this is politics at play. So this means that this is the beginning of the campaign for the next midterm. The Democrats will be positioning themselves as the champions of healthcare for the average American, and Republicans will have to play their game there. So this is the start of the campaign. So we're done with this. There will be needs to fund the government again as soon as January 30th. So in less than, let's say that's 2 months and a half. Here, it's not the whole government. Some parts will be funded. It's always complicated, but the debate on healthcare, this will be the official start of the campaign for the 2026 midterm. Now the table on the right, there's multiple tables like this. This one's from Morgan Stanley. Everyone's trying to guess when the data will come out. The white line in the table, this is the Fed decision. And as you can see, the important data, which is CPI and employment, will likely be coming in after. So the Fed will have to rely on the data that it already has. The odds that new data will make it change its mind are pretty low here. And we already know that we likely will not have an inflation report for October. For the jobs report in October, we know that we will not have the unemployment rate because it's a different survey than the one that gives you the number of jobs that are added. So it's going to be a complicated picture for a while. But talking about the Fed, now the outlook on the Fed is getting blurry. And last week on November 7th, the odds that the Fed was going to cut in December were about 65%, close to 70%. Now we're at about 50-50 odds. So that's a significant shift in a week, and that explains some of the volatility that we've seen in the markets. And what happened this week is that we got some more information from and opinions from voting members of at the Fed. And we had, more specifically, Susan Collins from the Boston Fed. She's a moderate hawk, and she says that she wants rates held, quote, for some time. So it's not just a 1 month thing or one decision thing, it's for some time. And Neil Kashkari is more of a centrist from Minneapolis. He says that he moved backing 3 cuts in September to opposing the October cut. He did still vote for it. He rallied behind the troops, but he wasn't behind it. And now he's undecided on December. So Jay Powell's September, October, December baseline no longer commends even a slim majority among the 19 FOMC participants. So that was one of the certainties of the market, and now it seems that we won't be getting that. And looking at 2026, now we might be getting a taste of what's to come, because we know that Jerome Powell's term is about to end. We know that we'll have a Trump-aligned chair for sure, but will we see more of this where the officials dig in and demand hard data before any cut? Because the Fed usually votes pretty much as a block. There can be 1 dissident, 2 dissidents, 3 is very rare in history, but now we're looking at the potential of dissidents on both sides of the vote. So if Powell cuts in December, the likely hawkish dissents would be Collins from Boston, Schmidt from Kansas City, possibly Mussolem from St. Louis, maybe Goolsbee from Chicago, and maybe even Barr, who's a governor on the board. And if Powell skips, then the likely dovish dissents will be Governor Myron, Bowman, and Waller. They've already dissented in the past. So that makes the votes at best 9-3, at worst 7-5, which is very rare for the Fed. Now markets looking at that, they need to reprice the future. So that's what's bringing the volatility in the markets here. Charts on the right, you can see there's still lots of easing that is priced into the market. So if the Fed reprices that, of course, growth names like the AI and tech, they will be hit. That explains why NASDAQ here is also taking a hit on top of the let's say, on the questions that investors are asking themselves about the future of AI and what's priced into the markets and all of this. So getting complicated. We'll keep you posted as we move forward, but the next data points that can maybe crystallize the decision of the Fed or make them change their mind, likely it will be elusive for a while. Now moving quickly to Canada, PM Carney unveiled the second round of major projects he wants fast-tracked. You have the projects on the right. Again, this is appropriate to be discussing projects like this. This is still our opinion. You want Canada to be an energy superpower, natural resources superpower, to have more capabilities of exporting globally. So this is all aligned, and you have the map on the left to see which projects are near where you live. But again, we remain skeptical on one thing. It's not just the government alone that can do that. These are private investments where the government plays a role. And if you want the government, if you're the government, if you want the private sector to invest massively, you need to make sure that they want to invest massively. That means anything that has to do with the tax code, regulation that's predictable. You want all of this, and we didn't get everything that we hoped for in the budget. So again, these are the right topics to discuss, but will it happen as quickly as we would want? Well, let's hope so. but we would still expect the private sector to be reluctant to invest massively in the short run, and maybe the government will have to do something more to get the private sector to jump in here. So what we'll be watching next week in Canada, we'll have CPI inflation. It would take a massive surprise for the Bank of Canada to come back online. Right now it's on the sidelines, so we'll see. But what's expected here should be pretty much bang with the targets. CFIB Business Barometer will be following that, because anything that has to do with business confidence becomes very important in 2026. And retail sales. And in the US, of course, housing starts, building permits. When will we get what? I mean, we don't really know, but we know that we will be getting the FOMC meeting minutes. We know that we will be getting the S&P Global PMIs and the University of Michigan sentiment survey. So that wraps it up for the week. Always a pleasure to serve you. If you appreciate the content, please don't hesitate to share. And of course, come back next week.